Hello, ladies and gentlemen. I'm Nick Harding, the Chief Executive of LendingWorks. Before I tell you a little bit about LendingWorks, I thought I'd tell you something about another very successful investor and what he does with his cash when he's not got it in equities. So Mr. Buffett has been a fantastic timer of the markets over the years, and you'll be interested to know that right the way throughout time he's picked highs and lows in the markets, and right now he's got a great deal of his money in cash, or specifically in US government bonds, a very safe form of lending money. The reason why we think this is particularly relevant is because we think housing your money at a time when equities may be looking slightly expensive, there's a great opportunity to put that money to work in lending through a very safe medium. So a little bit about LendingWorks. We are a personal loan provider through a peer-to-peer lending platform. We match shrewd lenders with prime UK consumers, so they're all personal loans. All of the loans are between £1,000 and £15,000, and every one of the borrowers has been very heavily underwritten to make sure that they can afford to repay their loan and that they are creditworthy. We are indeed at the top of the price comparison charts for a number of loan sizes, and we're very competitive across that spectrum. So my background came from financial services. I was in corporate banking. The entire team, in fact, has come from financial services. Our chairman was a board director of one of the high street banks, and indeed was also the chairman of the Finance and Lease Association. At the end of his career, he decided to do something slightly more socially rewarding for him, and decided to join LendingWorks as our chairman. Our CFO is around somewhere, who's also an accountant. Our investors include a group of angel investors who we completed a round with them in January this year. One of them is David Kite. You may have heard of them. Another used to be the head of UK equities for Man hedge funds. So a group of angel investors who we're really pleased to be working with. Our lenders are UK individuals. They're people like yourselves. They're angel investors. They sometimes are institutions, family offices, a really broad spectrum of lenders who lend through our platform. One thing that we've talked about a lot today, and we're really pleased about, is the impeding FCA regulation that will be coming in on the 1st of April. We're delighted to have the presentation, the regulation come into the industry and really create a level playing field and a position where you as the lenders can be really confident in the businesses that you're lending through. So why LendingWorks? I don't know which way to start on this. So first of all, fantastic returns or market-leading protection, but I'll go with the protection first of all. So of course, whenever you're judging a return, you have to look at the risk involved. What we've tried to do at LendingWorks is give you an offering that mitigates that risk as much as is physically possible. So whilst we want you, our potential customers, to trust in us, we also think that it's much easier for you to trust in us if an institution, for example, an insurance company, has done that before you. So what we have done, and we're the first in the world to offer an insurance protected peer-to-peer lending platform. We have gone to a UK-based insurance company who offer loan default protection. We're also protecting through the same insurance policies against fraud and crime. Now, to give you a little bit of insight into the way that works, those insurance policies protect against a default rate of up to 10%. Now, the market rate for defaults in prime UK consumer lending through peer-to-peer lending is roughly 0.5%. So you can see that the protection offered through the LendingWorks Shield is dramatic. Coming back to the returns, so the returns, as you can see, I mean, these are actually slightly out of date and have gone up slightly since then, but they range from 3% if you're lending your money for 1 year, to, I've just seen a 1 minute board, I better speed up, to 5% if you're lending for 5 years. And so whilst they may be smaller returns than some of the other people who have been speaking here today, the thing that we're really confident in, and the thing that we want to ensure that all of our lenders know, is that return, we want to be paying every penny of that return to you, and so we've mitigated the risk against that.